Well, China is probably one of the most interesting experiments ever in economic planning. You have an economy that we know is growing very, very fast, but is relying almost solely on property investment right now to achieve that growth, far more than its trade surplus or its reliance on its own consumers. And so much so that I think we're in uncharted waters quite literally with China.
Now, uncharted waters meaning what sort of thing could happen?
Well, when you have an economy like China's that is dependent upon construction for 60% of their economy, which is almost unheard of levels, to put that in perspective, Western economies are somewhere between 10 and 15% a year. You need to keep the construction game going, to keep your economic growth game going. And that's why I've dubbed it the treadmill to hell, because they are inexorably linked to real estate construction.
Give me some sense of how this compares with other notorious, if you like, economies that have been based on real estate, particularly those in the Gulf.
Right. Well, I'll give you even bigger examples. In the same region, we had the Asian Tigers in the mid-'90s, and they embarked upon a capital spending spree and construction boom with primarily Japanese money fueling it. And for 5 years, for the year ending, I believe, 1998, those 5 economies, Malaysia, Thailand, Singapore, South Korea, and Indonesia, averaged construction of about 30+% per year. China is twice that. Also, to put this in perspective, maybe that your viewers will appreciate, the recent Western property boom in Europe and in the States, we saw construction float up to about 15 to 17%. So that puts it in perspective. In some of the Gulf economies like Dubai, the number was probably between 20 and 30%.
Still significantly less than what you see in China now.
Half of what we see.
And how did those stories end?
Well, we know those cases, they didn't end well. And there was always a reason that we know at the time why this time it was going to be different. And, of course, we hear the same thing in China today.
Now, we'll get on in a minute to some of the challenges, if you like, to your thesis. But just set out for me what you think the impact of a rocky end to this would be, not just for the Chinese economy, though we can certainly look at that, but for the global economy as a whole.
Well, I mean, clearly Chinese demand for this construction boom is fueling commodity demand, particularly industrial commodities. That I have very little doubt about: copper, iron ore, so on and so forth. And I think a cessation of construction would be problematic for companies in those businesses and the economies in those businesses. For example, Australia or Brazil, exactly. Canada maybe less so, but still tied in. I think that would be the biggest problem. Ironically, the U.S. is probably the best insulated from a Chinese property market collapse.
But those countries like Australia and Brazil are obviously the two best known that have, as it were, tied quite a long run of economic success to shipping commodities bushel by bushel or rock by rock to China, or ship by ship to China. They would look in a tricky state.
I mean, I would think so, and I think, I mean, it's interesting that the only other countries that are experiencing a property boom besides China are Brazil and Australia.